Hi, I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. We've had another unsettled week in equity markets as traders try to work out how much of the knock-on effects of COVID and the closing and reopening of our economies are transitory factors and which are more deeply embedded and therefore potentially structural. The two biggest areas of concern are inflation and supply chain disruption. Q3 earnings season, which kicks off in just under a fortnight, will no doubt shed some light on this. Much of the growth in EPS that U.S. businesses have enjoyed this year has come in the form of margin growth. However, if inflation is here to stay and supply chains remain restricted, then those profit margins will come under increasing pressure. The uncertainty about the outlook of earnings is part of the reason that we have seen equity indices pull back in recent sessions. However, there are some better-looking omens to be found in the insider trading data released over the last week. For example, if we look at the trades made by 10% shareholders or greater, we find that out of a total of 52 transactions, 20 were purchases. Whilst that's nowhere near a majority, it's a far higher figure than we have seen in recent weeks, though sales still outweigh purchases across all insider categories in terms of both the number of trades and their size. And in shares like ZoomInfo, it seems as though insiders can't get the stock out of the door quick enough. Carlyle Group TA associates and directors Todd Crockett and Jason Mironov all sold more stock in the last week, though even here the size of sales made by these insiders are smaller than those seen earlier in the month. During September, insiders at ZoomInfo sold 47,925,000 shares in the company and raised $2.895 billion as they did so. For the first time in a couple of months, we can point to some significant insider purchases, one of which strikes a chord with last week's theme of investing in real estate and commercial property. Safehold Inc. is a relative newcomer to the sector. It was founded in 2017 with a view to disrupting the way that leases and ground rents were formulated, valued, and accounted for by property owners. Safehold offers financing alternatives and structures that allow owners to free up hidden value from their assets and income streams. Safehold was conceived and founded by the specialist investment manager Istar Inc., who have more than 25 years' experience in the commercial real estate sector. Istar have been adding to their holdings in Safehold and have recently bought just over 685,000 shares in the company for a consideration of some $52 million. The majority of that stock was purchased at $76 from Safehold Inc. and was part of a larger fundraising by the company, which also sold a total of 2.2 million new shares to other investors at $76 a throw, raising approximately $167.2 million in the process. For now, Safehold stock is trading below that price. However, the company intends to use the funds it has raised to expand its existing business and investments over the longer term. Another set of insider purchases that caught our eye were made at specialty chemicals and ingredients group Sentient Technologies Corporation. The company is a constituent of the S&P MidCap 400 index with a market cap of around $3.91 billion and annual sales of $1.33 billion, and over the last 52 weeks, its stock price has risen by more than 59%. That puts it mid-table in the industrial, organic, and chemical sector index in performance terms. However, it has comfortably outperformed one of its principal rivals, International Flavors and Fragrances, whose stock price is up by just 10.35% over that same period. That outperformance might help to explain why long-term shareholder Winder Investment Pte. Have been buying the stock. In fact, since the end of August, the fund has bought a total of 720,679 shares in Sentient Technologies at prices ranging between $86.92 and $93.09 for a total consideration of $64.89 million. There are several interesting factors at play here. Firstly, Winder Investment Pte., a Singaporean-based company, is ultimately owned and controlled by one of Europe's richest families, the Wallenbergs, whose various holdings and business interests have an estimated turnover of around $154 billion per annum. Winder Investment is also a major shareholder in International Flavors and Fragrances, and it has been adding to its holdings in that company as well and has purchased almost $65 million worth of stock in IFF over the last month. Now, we could be putting two and two together here to come up with five, but Could Winder Investment and its backers be considering merging the two companies at some point? International Flavors and Fragrances is 10 times larger than Sentient Technologies, but the latter business seems to be a more efficient company. So a bid for it or a merger proposal for its smaller rival, especially an offer that had the backing of a mutual major shareholder, is not that hard to imagine. That's all we have time for today. Always make sure you do your own due diligence before making any investment decisions.